Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 3rd of October 2015 and we're going to address the rise in gold and silver prices yesterday as a result of the US jobs report. The US economy added just 142,000 jobs in September, compared with an increase forecast by economists of 205,000. The number of new jobs for August was cut by 37,000 to 136,000, and the July total was also reduced by 22,000 to 245,000. The number of Americans in the labour force dropped to a 38-year low. The labour force participation rate, that is, those in work or seeking employment, plunged to 62.4% in September. The Labour Department's numbers reinforced fears that the China-led global economic slowdown is hitting America's recovery, adding to doubt about whether the Federal Reserve will raise rates before 2016. The slowdown is seen by many as evidence that economic difficulties abroad are beginning to wash up on US shores. Wall Street opened sharply lower, with the Dow Jones and S&P 500 indexes both down about 1.3%, but later recovered to be up about 0.5% and 0.6% respectively. The FTSE 100 ended the day up 0.9% at 6,129 points, despite also turning negative in the afternoon trading. Tom Porcelli, the chief US economist at RBC Capital Markets, described Friday's non-farm payrolls report as absolutely weak. He added, "So if you have a weak report here in combination with some of the other weaknesses that we are seeing across the globe, the odds of a rate rise get dinged for December." Michelle Girard, an economist at RBS Securities, said, "Every aspect of the September jobs report was disappointing." She also believed that the Fed would be forced to stay on hold over the remainder of the year. The US dollar also fell to a two-week low, and US Treasuries yields hit their lowest level in more than 5 months. Gold rose 2% to $1,138 a troy ounce on Friday, from a low of $1,105. Silver rose more than 5%, closing at $15.26 from a low of $14.44. Also its biggest one-day gain since April. Platinum, though rising yesterday, closed the week down 4% at $909.50. Shares in gold miners rebounded on the news, with Barrick Gold up 5.7% in Toronto. The company's shares have, however, fallen 82% over the past 5 years. The gold market has been hit by the strong dollar this year, which is negative for the metal, as gold is priced in dollars. It has also felt the effect of a slowdown in China and other emerging markets, which has hit other commodities from copper to oil. Gold is down 4% on the year and 40% from its 2011 peak in US dollar terms. That has led investors to pull money out of exchange-traded funds that track the metal. Holdings in the SPDR Gold Trust, the largest gold-backed fund, however, inched up 0.3% on Thursday. If demand in the largest gold consumer, China, improves, analysts said gold could hold on to its gains. Interestingly, the premium for gold on the Shanghai Gold Exchange over gold futures traded on the COMEX was at $3 to $4 a troy ounce in August, and rose further to average $6.9 in September, according to Barclays. That gives banks a clear incentive to import gold to feed retail demand, they said. China's shift to a more consumer-driven economy should also benefit jewellery demand, according to Capital Economics. A boost to China's jewellery consumption should more than offset any potentially negative impact on savings demand, they said. China's central bank reported this week its holdings rose again in August, though by a slower pace than the previous month. The People's Bank of China started to report its gold holdings monthly this year, which has given greater transparency to demand in the country. Still, other analysts noted that the Fed remained committed to raising rates, which was likely to overhang the gold price until the first rate rise took place. Gold is likely to see periodic ups and downs as expectations adjust, but maintain its downward trend, analysts at Macquarie said. Gary Wagner of Kitco News said yesterday, "In my opinion, on a technical basis, we really need gold to close above 1157 before I can get bullish long term. Right now, we don't have any technical evidence that we've broken out of this range." According to Wagner, gold's key levels are now around resistance at the 1140 and 1157 price point. Our short-term view is that next week we shall see if there is any follow-through on gold buying, and this will dictate the trend for the coming month. Silver is facing a schizophrenic situation, whereas the slowdown in the global economy will reduce its demand, whereas its demand as a precious metal may likely rise, especially if the dollar falls further next week. Whilst we hold to our previous position that gold and silver are still likely to fall by the year end, we cannot discount the possibility of a weakening dollar while interest rates are likely to remain on hold for some time, and the potential black swan event occurring with regards to battleground initiatives by Russia in Syria. We hope you found this video useful and informative. If so, please give it a thumb up, comment, and if you haven't already done so, please subscribe. Also, it would be very helpful if you could share this on Twitter and follow us at Illuminati Silv1. Disclaimer. Silver Illuminati owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.